Pop quiz. Which of these coins do you owe capital gains taxes on if you sell at a profit here in the United States? The answer, of course, is whichever one you didn't lose in an unfortunate boating accident. So let's just start this off saying that you should always pay your taxes. You don't want to mess with the tax man. He can take away all the things that make you happy. And since you can't see me giving slow and dramatic winks throughout this video, I'm going to speak as plain as I can here. And then you can walk away from this with some basic info and then form your own conclusions. So one of the big misconceptions is that the American Gold Eagle and the American Silver Eagle are exempt from capital gains taxes here in the United States. This, unfortunately, is not true. Gold is classified by the IRS as a collectible asset, and that means it's subject to capital gains taxes. It does not matter which gold coin it is, they're all subject to the same taxes. And the same goes for other precious metals, whether it's silver or platinum, palladium, whatever. They're all affected by short and long-term capital gains taxes. So what does that mean? If you buy a coin and sell it within a year, that's short-term capital gains. And what that means is it's taxed just like regular income. So if you lose money on that coin, then it's a loss on your tax returns. If you make money on that coin, it's a gain on your tax returns. So if you buy a coin for $1,500, you sell it for $2,000, there's a $500 gain there. And that tax is going to be like normal income. So effectively at your highest tax bracket. That, again, is if you buy and sell within 12 months. Now, if you hold that same coin more than 12 months, you're going to be looking at long-term capital gains. And that's a little bit different because there's a cap at 28%. And if you're thinking to yourself, well, wait a minute, I thought it was a 20% cap. Collectibles are actually handled differently than other assets, say like stocks, which have a capital gains tax limit of 20%. The same goes for ETFs. So regardless of whether it's physical gold or silver or a traded gold or silver, the capital gains taxes for collectibles work the same. Again, with the cap at 28% rather than the 20% that works for most other assets. So this sounds pretty straightforward and it sounds pretty terrible, but stick with me for a few minutes. There are a few details I want to bring up. The first detail you should know is how to figure out your cost basis. Really, if we're going to just boil it down, your cost basis is not just the spot price of whatever metal coin you bought. It's actually the premium as well. Anything. If you paid $1,600 when spot price was $1,500, your cost basis is $1,600. So if you turn around and sell that coin for $2,000, your actual gains are $400, not $5. And if you paid to have that coin stored or appraised or anything like that, that also factors into your cost basis. Now, when you go to report that $400, you do that on Schedule D of Form 1040. I'm sure everybody will remember this. It's just a section in your tax return where you talk about any additional gains. Now, we've talked a few times about larger purchases. So say 25 ounces of these Canadian maple leafs. That would actually trigger a 1099-B, and it would no longer be on you to fill out because it will have been done for you. The same goes for Krugerrands or Anzas or $1,000 face value of U.S. constitutional silver. Or gold and silver bars that are 1 kilogram or 1,000 troy ounces. All of these things also will trigger that 1099-B. And if you want that list again, that's an easy Google search. Now, if you follow the tax laws to the letter, it doesn't matter if you fill this out or somebody else fills it out for you through a 1099-B. But because you can't see slow dramatic winks here, You'll just have to imagine why some people might prefer to fill it out on their own. So we're going to drift off of actual tax law here for a minute. I get a lot of comments where people say you're an idiot if you sell to the local coin shop, and they'll direct them at me, they'll direct them to other people in the comments. But you can imagine why certain people might want to use cash to purchase their gold in the first place. Because if you use cash, there's no actual record of the purchase and there's no record of the sale, assuming it's not on that list that triggers a 1099-B. So just between friends here, we all know that gold is taxed. And we all want to make sure that we pay our taxes. But what gold are we talking about? I don't see any gold. This is what people are talking about when they tell you they like to use cash for these purchases, or they tell you they like to sell only for cash. So when people tell you the 1099-B is a big deal, or they say they try only to sell locally, only to buy locally, maybe they're not an idiot for not selling to APMEX for that extra 1%. So in my case, I'm showing gold on a YouTube channel. So if I was trying to hide that gold, I probably would be an idiot, because here I am showing it. So let's take a look at a few other factors, because there are a few more details that are pretty important. Now, if you sell other collectibles and you sell them for a loss, then that's going to offset your gains. So if you sold at a loss within the last 20 years, you can carry that loss forward in what's creatively termed a loss carry forward. So let's just say hypothetically that you sell a bunch of roosters and sovereigns at a bit of a loss. And then a few years later, you sell a bunch of American gold eagles at a bit of a gain. Well, then the loss can actually cancel the gain. Again, this is all hypothetical. Now, you can't really carry forward a gain, but when I go in to do my taxes, if I have that gain, but in the last few years I have a loss, I can use that offset when I sit down with my accountant. Now, just a little bit of real talk here. It would be next to impossible to know what I paid for any of the gold that I've had, any of the gold that I have. It would also be extremely difficult to know exactly what I sold it for. So when this math comes together, there may or may not be a little bit of guesswork. And because these transactions were cash, nobody has any idea whether or not that guesswork is accurate. Now again, I try to do my best here, but you can imagine that over the course of 10 years, 20 years, 50 years, it gets a little hazy. And I think it's probably a pretty good guess that over time, people's gold just kind of, falls off the books. I'm not saying that's right. I'm just saying that's what happens. Okay, let's throw a few more details in here. If you are to inherit gold, your cost basis is the market value of the gold or silver or platinum or palladium at the time that, at the time the person dies. And in a happier scenario, if someone gives you gold or silver or platinum or palladium, it's the market value at the time that you receive it. So if a person bought that metal 20 years ago, that's not the cost basis for your capital gains. It's at the time that you receive it. So that at least is some good news for people who plan to give it to their kids. And there are also ways to defer your taxes. You can set up an IRA to defer your tax until it's distributed to you, just the same as any other IRA works. So the logic, of course, is that your marginal tax rate will be lower once you retire. So you use a trustee and they charge you a fee for administration and storage. And then you take possession of that gold sometime in the future and you don't pay any taxes until that happens. Now, all of that is on the up and up. But outside of legitimate tax deferment options, you can imagine that a lot of gold never ends up being reported in the first place. And that's one reason there's so much misunderstanding of actual tax implications on precious metals. In a lot of cases, the person holding the gold has to volunteer that information before it would ever be subject to tax in the first place. So if a person tells you that gold and silver are not taxable at the time of a sale, they're wrong. But if a person tells you gold and silver are not taxable while they're giving you a slow, dramatic wink, then you'll at least know the whole story. Look, let's be clear, I'm not promoting that you try to skirt taxes. And in my case, honestly, I don't mess around with the IRS at all. If I have capital gains, I pay my taxes. And that's why I want to make it really clear, once again, that all my gold got lost in an unfortunate boating accident. This is a touchy subject and not really one that I wanted to do a video on, but I know there's a lot of misinformation out there. So if you want details, talk to a pro. You need to talk to a tax professional rather than just listen to some guy on the internet, because there's at least a decent chance that I have some of my details screwed up. So if you didn't like any of the information I put out there, don't kill the messenger. I still hope you'll subscribe, hit that like button, and have a fantastic day.